And this sort of leads into Jerry's question. He says, with oil and gas in bullish mode, what would be the best vehicle to take advantage of price increases? Well, if you still think they're going to stay in bullish mode, Jerry, you would use the same strategies that you'd use for any neutral to bullish stock. I'd be considering covered calls if you wanted to pay for the oil and gas stocks, the oil ETF, OIH, for example. You could do bull put credit spreads against the positions, bull call debit spreads as well. You know, if you were buying call, even a diagonal calendar spread, in that case, you would still use neutral to bullish positions. And so let's just take a basic search. I'm going to use bull put credit spreads. And I'm going to take out our preferred. Let's just go into the search here. Now, I still, Jerry, would want to approach any position in a strategy that I'm going to use for something that's bullish right now, something that's showing me the trend that I want with the same criteria that I would use before, even if it was just a stock. What do I mean by that? Let me take out all the filters here. But I'm going to look for the same thing. I'm going to look to go 2 weeks out in time to the 18th. So let's put in 15 days. We're going to go 7 to 15 days out in time. Sort of isolate March 18th. I'm using a leveraged spread, so I still want at least a 10% return. Yeah, I'd like to still be a little bit range out of the money. Let's just put in 5 because I'm going to control that with probability as well. I'm going to look for only bull put credit spreads that have an 85% probability or higher. Now, I'm going to make sure that the option bid is at least 10 cents. I don't want to see something that has a 0 bid and a $4 ask in that case. So I'm also going to restrict my bid-ask spreads to be less than 50%. Okay, so the difference between the the bid of the short option to its ask price and the bid of the long option to its ask price, I'm going to limit that to be at least 50% or less. Let's put in a good open interest of at least 10, maybe even 100. Now let's just use technicals. Excuse me, Jerry. Let's just use minimum net credit. Yeah, 0.25, why not? All right, and we're just going to use some technicals. What am I going to look for? I think rather than just looking for a stock that's trading above its 20-day moving average, I'm going to look for a stock where its 20-day moving average is above the 50-day, something that's been really bullish. And I'm also going to look for a stock where it's above the 20-day moving average for at least 3 days, a more pronounced bullish trend going forward. In addition to that, I want to see a positive MACD cross. Let's go at least 2 days. I want the MACD line to have crossed above the signal line for at least the last 2 days. No other restrictions. See, the default bull put credit spread filter that we prefer, the weekly bull put, is actually removing indexes and ETFs just to focus on the stocks that match our desired criteria. And so I'm going to use that as well. Okay, average stock volume, let's make sure there's at least a good range. Let's do 750. So even if it's an ETF, at least 750,000 shares of the underlying are traded per day. I might want to take that out if you're looking purely for the indexes. Now, I'm not going to use any fundamentals. We're just going to look straight at technicals. And where am I going with this? Well, I'm expecting to see some oil and gas pop up here. Alcoa, Hess, there you go. Spider Oil and Gas XOP, a 111, 109. This is not a direct recommendation or suggestion. But what I'm showing you is that if you put in a search for a strategy, even with the market, bullish strategy, bullish to neutral strategy, Jerry, even with the market the way it is, if you're looking for the stocks that have the technical criteria that you're looking for, which stocks are moving up, which ones are in the good uptrend, which ones have a positive MACD, if you like to use Bollinger Bands and RSI, that's there for you as well. You use the same strategies that you would use on stocks that you're neutral bullish for, depending on your account size and what your preference is and what you're comfortable with. You're still doing maybe covered calls, naked puts, bull put credit spreads, maybe at or out of the money bull call debit spreads, the diagonal calendar call spreads. And if you put in the criteria for those positions that you'd want to see, reasonable uptrend, positive MACD, a good number of days above the 20-day moving average, see a more longer term or pronounced trend, Jerry, you're going to see the results you want. You're still keeping bullish positions, but you're seeing the stocks that have still been moving. Yeah, some of them are going to be negative today. That's perfectly fine. But you're still looking for the ones that are going to be moving up in that case. Another thing I could do is I could choose just to screen against a default company list of indexes and ETFs. If I just wanted to see those specific oil or those ETFs that are moving up and have that technical criteria I want, I'm going to put that in, remove the stocks, and we're going to see some 2x bull oil, some regular oil, energy sector as well. I was expecting to see more inverse ETFs here. I was expecting to see SH and some of the 2x inverse ETFs because I didn't tell it to remove inverse ETFs. I expected some of those to pop up in here as well. But here, mostly dominated by XOP, but Gush is in there as well. XLE, of course, JNUG is in there as well. And we saw Wheaton Precious Metals, and I wouldn't be surprised. I haven't been following, but I thought SLV and GLD would come up here. They probably don't have the criteria I want for the return and the probability that I want to see for the bull put credit spread, which is why I'm not seeing those. They probably don't match that other criteria, but they probably do match the technicals as well. And this is what I'd expect to see. So when I run my weekly bull put, I'm still seeing the stocks that match the criteria that I want for the technicals and fundamentals. Because yes, when I screen for a specific strategy, whether it's bullish or bearish, it's not just about setting the option criteria that meets my desires. I want to set the stock criteria, technicals and fundamentals that match the sentiment for the trade, because that's, a good part of having a winning trade is following the stocks that match the sentiment for the position as well. Okay. All right. So those are some good ones there. And the inverses, of course, could always work for you as well. The short QQQ, the short S&P 500, I'm sorry, in that case. If you think the market is going to continue in this general direction and that oil and the metals are going to be continuing to be pushed up in price as well. Okay, so let's go ahead and take those out and just go to no lists again. Okay, but I might set up the same search for a covered call. Jerry, I might use that same type of bullish criteria for a covered call search with the return and downside protection you want. Doesn't matter to me if it's an oil company. Doesn't matter to me if that I want something that matches the trend. And that's, of course, if you think this is going to continue to push it up in that way. The calendar spread, you could still do that. If you think it's going to be a prolonged one, as you mentioned, you could buy a call that's 90 days, 100, 120 days out in time, slightly in the money, delta of 0.7, as Fernando mentioned, and then maybe sell an at the money or out of the money, of course, near-term call against the position. The poor man's covered call, but I prefer to use the term diagonal calendar spread as opposed to the poor man's covered call. So, Jerry, that's what you would look at. You would just use the same strategies that you're doing when the market was bullish. Just look for the stocks that are matching, or ETFs, I should say, stocks and ETFs that are matching the trend that you want. You put that into any search. You won't be surprised at what you see. Lockheed Martin, Alcoa, Hess, Rio Tinto, the ETF. Let's just go to page 3, for example, see if there's any different ones. Saw Devon Energy there. XLE, XOP again. Chevron, Texaco, ConocoPhillips, DVX, so they're in here. They just don't have as high as the returns as some of the other ones with the probability I'm looking for. That's funny. Upstart's there as well. That huge run up to 157, then it pulled back to 128. Not saying that's a good one there as well.